Good afternoon, everyone. I want to make sure everyone can hear me. This is Ann Amel from Safe Crossings Foundation. I want to welcome you to our webinar, Planning Your Legacy with Chanel Reynolds and Wesley Burns. As I said, I'm Ann Amel, and I'm the Development Director at Safe Crossings Foundation. Today, we are going to hear from two professionals in estate and planned giving, but first I want to tell you a bit about us. Our mission is to be a leader in funding services that help grieving children heal. Our vision is that all kids who've lost a loved one receive the emotional support they need. 1 in 8 youth will experience the death of a parent or sibling before they reach the age of 25. It's 1 in 8. We know that if youth have a caring adult in their lives, receive counseling, and have peer support through school groups or camps like Camp Erin, they truly can heal and thrive. We are a foundation, so we raise money and we grant money to organizations that provide free grief support to services to children and youth ages 6 to 25, excuse me. We were founded in 1989 and are celebrating our 35th anniversary this year. We and our donors are proud of our impact in Seattle and across Washington state. Our donors include us in their philanthropy and estate planning for a variety of reasons, and I just want to share a couple of those with you. Really gives you a sense of who our donors are. They or someone they know have received grief services. They lost a parent or sibling when they were a child and didn't have these kinds of services and wish they had. They have come to know that Safe Crossings Foundation is a solid organization, that it is a regarded and trusted leader who will ensure that these services are funded long into the future. I want to underscore that last point because today we are talking about a heavy subject, death. Death of our loved ones and our own death. When I talk to donors about their philanthropy, they describe their individual reasons for giving now, but they are also thinking about the future, what their families may need, what grieving kids in our region will need, and they want to be part of realizing the mission of Safe Crossings Foundation, even after they're gone. We have heard from our donors that they want resources that enable them to be philanthropic now, through donor-advised funds, annuities, trusts, and in the future. They want resources that will help them plan, checklists, language for their wills, information about health directives. This webinar is our answer to these requests. We welcome our donors and we welcome those of you who are hearing about Safe Crossings Foundation for the first time. Our format today will begin with welcoming our two board members who are leading the webinar, Chanel Reynolds and Wesley Burns. They will introduce themselves and lead us through estate planning, planned giving, and financial and legal considerations. Then we will have time for Q&A before we send you off a few minutes before the top of the next hour. Chanel, let's go ahead and begin with you.
Great, thank you so much. Can you all hear me? Hi, I'm Chanel Reynolds. I am founder of Get Your Shit Together and a very proud board member of the Safe Crossings Foundation. I have been on the board for only a handful of months. However, I have been a huge fan, advocate, and grateful recipient of their services when over a dozen years ago, my late husband died and I so desperately needed and wanted to support my kids through that process and found Safe Crossings and have been a huge fan ever since and supporter. And really, that's what this is for, talking about our families, what's important to us, and how we can do our best to support them now and well into the future. So nice to meet you all. I look forward to talking to you in a few minutes after Wes gets a chance to introduce himself.
Yeah, hello. My name is Wesley Burns. I am the owner of a financial firm in Seattle, but more importantly, and for purposes of today, I'm a board member. I've been on the Safe Crossings board since 2015, so this is the end of year 9. And my call to the organization was at the age of 11, I lost my brother who was 10 years older. And as one of those statistics, I could have benefited greatly from the services that Safe Crossings has. And it just so happens that the work of Safe Crossings dovetails really nicely with the work that I do professionally in helping people figure out their finances and their legacy that they want to lead. And so I'm here to add any value to Chanel's presentation that I can, and we'll talk about philanthropy and financial advice towards the end.
Well, Wes, I have to say that is very generous of you. I'm not sure that we'll call this my presentation, but I do want to just say we're going to talk about estate planning, kind of what is it? Like, land barons are not the people who do estate planning, it's all of us, and it preserves now, later, and the future. And then Wes, who we'll give you some actual real practical advice and tell you what to do and how to do it. So, and we will absolutely leave time at the end for questions. If you have questions, feel free to put them in the chat now. That would be really great. Comments also. We are a lot of people from all over the country with lots of different priorities. So I always ask you to be as only as personal as you want. Please don't put your social security number in the chat. And we welcome all people with all questions. So thank you so much for being here. And we will absolutely leave time at the end and get through as many questions as we can. So getting your shit together, what is that and how do we do it? I particularly love that image of the book full of things you wanted to do or say. So for me, when I started with this, it was really a moment where I was in the hospital over a dozen years ago. My late husband had been in an accident, and there was a week in the ER and the ICU that started with do everything possible to keep him alive till I get there, to realizing over the course of the days that his injuries were unrecoverable. And the estate planning, financial planning, password sharing, life insurance policy getting that we did do made a giant difference in my life and my children's life, our child and my stepdaughter and our blended family. And it became so clear to me that we're not very good, or historically have not been very good at getting our shit together. And the things that we have learned or have on the list of stuff that we feel guilty we haven't done yet, or feel a little overwhelmed with knowing what it is and how to do it, and are you going to do the right thing? They're all pretty individually simple things, but the umbrella of them all can quickly cause a lot of overwhelm for a lot of good reasons. And I just might go watch Battlestar Galactica reruns again because it's easier than figuring some of the stuff out. So I started at a place where I didn't know what I didn't know. The things that we had done helped tremendously. And the things that I didn't do, on the left is a checklist or just a list of stuff that I was trying to get out of my brain amongst the 500 other things, where it's like, who do I talk, what is probate? I have to get my son into kindergarten. What is a financial thing? And I have to do this. What do I do first? And so a lot of this getting our stuff together is being able to put away the emotional hand wringing and worrying and wondering of what would happen, and make the most amount of active, small choices that we can now. Nobody lives on perfect island, but we can write down a password to a phone so somebody can have a contact list. So I started off in a place where I was Googling, what do you do if somebody dies? My list became so overwhelming that I needed to put it in something I could print out and have on the kitchen table. And so that's where Get Your Shit Together, which was the words that came out of my mouth standing in the ICU. And this checklist came together as a place to start for us to figure out what's more important. And so only 50% of people, US adults, have a will. So if you don't have one yet, or if it's drafted but not signed, or you're not sure what a will or a living will is, and if you need to talk to an attorney or what you can do on your own, you're in good company, because we all have probably something that we could update and complete or review. And even if or when you have a beautiful, gorgeous bow tied on top of it estate planning packet that's updated, there are still other things about password managers, or how and when do I want to be able to give my nephew the Elvis tribute costume collection that I have, because I know they really want it and somebody else wants something else. So gifting and planned giving is really a topic that I see as much larger and very encompassing of, for me, a gift to my kid is putting an extra key outside the house because he locks himself out all the time, or just some other information, videos, letting somebody know where the cloud file is of all of your family's genealogy, history notes, or pictures are. So a lot of us also know and say that it's important to discuss our wishes for end-of-life care. Very few of us, or much a smaller number, have done that yet. Women and children and underserved populations, minority populations have statistically not been more, that have statistically, let me start that over again, been more deeply financially and otherwise impacted if and when somebody dies, and or if somebody's ill and along the process. So there's a number of things we need to do, and we are going to help take a couple steps forward in 5 or 10-minute increments or more to help us feel a little less overwhelmed and prioritize the things we want to do now to give gifts to ourselves and time, gifts to our family, and for the future. So there is not a great process for what to do, how to do it, what's most important, especially after somebody dies. And the data seems to suggest that you or someone you know is likely going to die at some point. And the mental load, and just what even is probate, who do I talk to about what, and when do I do it? And we all feel that fear, and we all know that it can feel like a convoluted tar pit of documentation. And to quantify just a little bit, the big pile of stuff that some people have to sort through and carry, or lots of knots in a net that must be spread out and untied, is on average, it takes about 400 hours, and this is average, so there is a swing, and about a year to wind down somebody's estate. And so what we're doing here in advance is figuring out the things that are most important to us to ensure that there are fewer questions, fewer worries or wonderings, more steps, more plans, and that we're making active decisions about where our money is, where our energy goes, who gets the Elvis jumpsuits, and who and how we could set up a will or a trust or a gift or a fund to make sure that our children and are taken care of in the way that's important to us. And we know and feel, even if we have been there, if we are a caregiver right now, if we are lined up to be the executor or organizer of somebody's estate, over half of people who are managing somebody's estate or managing that after somebody dies, in addition to trying to show up every day for their families, support their families, get to work on time, put on pants. It is a big impact mentally and physically and emotionally. So what does getting our stuff together mean? So there are a few basic things that bubbled up over and over and over and over and over again when I was in the hospital, when I knew that my late husband's quality of life would never be able to be anywhere near what he would want. And then the days, weeks, months, and years afterwards, going through the pile of stuff I had to figure out while parenting. But estate planning documents, there are a few basic core documents, and I'll talk about a few of them in a minute. Medical decisions, what kind of things do you or don't you want to have when you are, let's say, in hospice or getting closer to the end of life? Financial plans, where's your money? Whose name is on it? Who has access to it? How easy or hard is that, those assets? How quickly are they able to go to the person you want them to go to with the least amount of fuss or confusion? Insurance plans. Do you need some? Do you have enough of the right kind right now or for later? Online account information and passwords. Everybody, but most of us have dozens and dozens of them. And so, for example, I didn't have the password to get into my late husband's phone. I still don't, and that was a really, really long time ago. And so some of the information or details or pictures that I might have wanted to have are gone. Some of the other things that were really important to have, I had access to or found. And then legacy, what we're talking about now, what we leave behind every day and far into the future. So a couple of things before we have the amazing opportunity to hear from Wes about some specific ways we can do this. But I get this question all the time, and it's a really great question. So what is an estate plan? What's in it? So there's some basic documents, some core fundamental decisions and designations, whether or not you are doing a small, not too many handful of pages will and documents, or if you're doing dozens and dozens of pages and have a much more complicated family situation or assets to manage. But there is a will, and you choose an executor of a will, a project manager who's going to be able to make those, hundreds of hours of calls and phone calls to manage your estate for you, take care of your stuff and your people after you die. There's court involved and financial and organizing. You also have a power of attorney document. That's a really great thing to have to let somebody be able to take care of things for you, medical or financial or otherwise, not necessarily at the end of life, but if you were to be ill and have a long recovery, if you we're not necessarily talking about your medical decisions and wants and desires and non-wants and anti-desires, which would be your living will, an advanced care directive, it's called. There are a number of different ways to go about getting these done. Some folks who have straightforward family dynamic, straightforward or not complicated assets will ask, do I need to do an attorney or can I do one on my own? What's a trust? Do I need one? And I always really appreciate being able to throw the trust issues joke into this. But there are additional reasons why you would want to create a separate or even more organization around creating a trust to put in a property or home. Some states, California being one of them, I have heard anecdotally, and the data shows is a hard place to die or get divorced, according to some. But the probate laws, the laws of the state, are a little more complicated. But always take the opportunity to talk to an attorney to make sure your questions are answered. Have a informational consultation, do your research. But in any case, there are small, free or affordable templates that can be okay or appropriate for some people who are really looking for, like, I just need to get guardianship established for my pet, and I want to set up a fund so my my pets will be taken care of if something happens. That's a less complicated and incredibly important thing for a lot of people. How much does it cost? It can be more affordable to costing, to hire a professional to create a customized will or estate planning package with or without an estate, a few thousand and up. And the average amount of probate costs and fees are generally more than what you would pay an attorney to set up the right package for you so you feel better. The other thing that I want to talk about when we're talking about gifts, whether it be financial gifts, whether it be your jewelry, there is the overwhelming majority of people that I talk to, especially those who are in the middle of something happening, or somebody has just died and they are not in the best place emotionally. Sometimes or frequently, they are feeling a lot of financial stress and hardship and needing to go through tubs of papers in the basement, or not being able to find an insurance policy or a certificate, or where is that one thing, or where might that other thing be. So one of the things that people will say, and here's a great tip. Often I get the question, and I don't know if anybody else has had to deal with all the stuff, whether it be at a family member's house, a parent's house, your own basement or garage you just won't even go into anymore because the boxes stare at you now. Often we start with the stress of, with estate planning, what are we going to do with all the stuff and getting rid of the stuff? I like to think about and ask if you would consider, if you had 1 hour, not 5 minutes and not 5 days, but 1 hour before the alien ships came down or the zombie apocalypse happens, to go through your home and safely, comfortably, grab or organize or collect the things that are important to you. Those might be those super important things. And I think starting with what's most important, rather than stuff you have to throw away or get rid of, is a great, important, helpful place to start. Because as you move forward with thinking through what's most important to you, what are those details or information? For somebody, it's going to be, a burner phone with all of your crypto. For somebody else, it's going to be organizing books or journals, whatever that might be. So that can be a less stressful way to get started. So what I like to say, in a world, well, as I've been doing these talks for over 10 years now, I'm like, especially now, but especially now is always now. But in a world where there are so many things that are out of our control, let's take care of some of the things that we can change. So I have a few suggestions for you for just 5 or 10-minute tasks. This deck and other questions can be shared out afterwards, but I like to suggest that we start with where you are, whether you're an emotional planner. I like to start with, like, the thing that's been on my list the longest or keeps me up at night, I want to take care of that first. Or if you have a linear chronological style, what might be the most important category of things? And I would suggest that as we are here and we have Wes available to talk to us more about financial advice from a brilliant financial advisor, I would love to turn it over to Wes, and thank you all for being here for part 1.
Wow. Thank you, Chanel. Actually, as I looked at your list there, which is just an amazing list, there are tools such as like Everplans is one of them. And so maybe another thing for families to do is decide, where do they keep all that important information? And some there are now safe, secure locations to do that in terms of on the cloud, as well as having paper copies. So and I can put that in the chat later, but just making sure not only do I have all my ducks in a row, but where is it and who needs to know and all of that. On to my slide, when I think about this topic of planning, plan giving, it is one that I'm very sensitive to, and one that, because giving is a very individual, personalized event. And because of that, I don't, want to espouse sort of my ethos on everybody. So I think that giving is something that's from the heart. And one of the most important one of the most important things that sort of I've learned about money, or have gleaned from money, is that, it's a tool. It's in and of itself, it's a piece of paper, but to the extent that it allows us to live the lifestyle that we want, to take care of our family and those that are important to us, family and friends, and also impact our communities in a positive way. Now, regardless of how far that we can think and see into the future, we are all going to leave something behind. For a lot of people, that may be debt, and for a lot of people on this webinar, there may be assets. And so this is where I come in, and where my work comes in. And so when I think about giving in financial planning, there's really I can answer that question, Lucy. There's really two frameworks that we are working from. And Chanel, if you want to move to the next slide. The types of giving that families and individuals are allowed, that we can do, are: one, during our lifetime. We can give to kids, we can give to charities and organizations during our lifetime, or we can give at death, or at our passing. And once people decide, I want to, or this organization or this type of giving is important to me, then it's my job to really put pen to paper and help them decide how much and what type of framework that they can use. And to both giving during our lifetime and giving at death, there are tax advantages to doing so. And so the reason why I start with giving being a family and a personal thing is that really has to lead the way. I don't let the tax tail wag the dog, but to the extent that there are advantages to doing so, it's incumbent upon us to use them. Next slide. So a couple of tools that clients will use in accordance with their estate planning and the financial planning that we've done, and that we'll talk about in some of these in more detail in a minute. People can give to organizations through the use of a donor advised fund. They can use a charitable lead annuity trust, a charitable remainder trust. They can start their own foundation. That's less common now with the use of donor advised fund. They can obviously give directly to an organization, whether that be cash or stock, or they can give through their estate. Now, what do you give and how much is the question? Next slide, please. And so in the financial planning realm, one of the things that we are trying to figure out is how much a family can spend comfortably every year without running out. And so once you, whether you do this on a spreadsheet, or whether you do this with your advisor, or whether however you do this work, one of the things that we can plan for is how much, in addition to the monthly spend or annual spend I can have, how much can I give to a charity and make a direct impact on an annual basis without putting my retirement and lifestyle needs in jeopardy. So through the financial planning software and through the discovery that we go through with clients, we can figure out on an annual basis how much giving we can do. Another way, for those that have less clarity around how much and they're trying to figure it out, one of the ways that I can try to probe this subject is, Chanel, next slide, is once we figure out, and this is I think, a powerful tool, or a powerful tool that will show people during the planning process, is once we figure out how much the family needs, and not just to live, their baseline, but to travel and to do the things that they want to do, we can look at how much will ultimately be left over. And so in this random no-name scenario that you see on your screen, this appears that there will be, for this family, about $2 million in assets left behind, and the purpose of their estate planning. And so, one, I can discuss this with them of, well, we're going to leave something behind. How do we want to do? Is this for our children? Is this for charity? Do we have anything that we're really, really intent on passing behind? And do we want to do it? Do we want to wait, 5 years or 10 years, or wait to give through our estate? Or do we want to do something where we can see it during our lifetime and see the impacts of those gifts? And so, that really does. And sometimes when people get to see, oh, wow, I'm in a better position than I thought I was in, or there's more opportunity than I thought that would be there. It really can get the conversation started on, and I've seen it in our own clients' eyes, of maybe they were giving a couple $1,000s a year, and every year they've increased those gifts because they've found out that their financial situation is better than they thought it would be, and they like to see the impact of those gifts on an annual basis. Next slide, please. Now, so like I said, the purpose, the gift drives the purpose. But if people are giving direct gifts on an annual basis, one of the best or most tax, and I'll explain this in a second, but the most tax efficient ways to give is if they have what are considered low basis stock, or stock that's appreciated. And this type of gift has a twofold benefit. So typically, if you were to sell a stock, we can use Amazon as an example, and I bought it for $1 and I sold it for $5, I would pay tax on that, the sale of that asset. However, if I choose not to sell it and I instead give a direct gift to an organization, not only do I not pay the tax on that gift, but I get a deduction for that gift in the year that I give it. And so for clients that have these after-tax accounts, and giving is important, and I see it actually with younger clients giving to their school through auctions and things like that, of taking stock portfolios that they have and giving pieces of their stock portfolio as their gift. So that's a really, really efficient way. One of the things that is actually important to mention about giving is, and why tax planning in the context of giving is a big deal, is the standard deduction. And so giving as a whole falls under the itemized things that you can deduct, itemized on your tax return. That is along with your property taxes, mortgage interest, and medical expenses that are above 7.5%. Now, I think in 2017, the tax laws had changed to where the standard deduction for right now for a single individual is, I think, just under 14,000, and for married filing jointly, it's 28,000, and for retirees, it's, I think, 29,000. And so part of that is really good, where you raise the standard deduction that everybody gets, but the downside, or maybe the planning side, is we have to be more, as expect mortgage in retirement goes away and other expenses may go away, we have less of an ability to itemize our deductions. And so doing things like this can allow the itemized deduction to be back in play. So the next, so we can give directly from stock, as long as it's above the itemized deduction threshold, directly to the organization and receive a tax deduction. Another complement to that is the use of a donor advised fund. And what a donor advised fund allows you to do, it's an investment account, just like an IRA or a Roth IRA or an after-tax account. However, the minute I give dollars to the donor advised fund, whether I give them to the charity that year or in subsequent years, but the minute I give the proceeds to the donor advised fund, I get to take that amount is deductible, essentially above the itemized threshold. Now, where this is in what I do is we may be planning to give a large sum of money to a donor advised fund in 1 year in order to maximize the tax impact. but we then give it out over to the charities for multiple years. So let's say we give 30,000 in 1 year, and we give 10,000 away from that in 3 years, over 3 years, and then we do it again in the 4th year. So we've basically taken the giving ethos that we have, and we've made that gift more tax efficient. Another way, so we have direct gifts from stock, we have the use of a donor advised fund. As a third way is more and more of our clients have retired, the use of qualified charitable distributions, acronym QCD, has become a really big part of their planning as well. And now you have to be of required minimum distribution age, which used to be 70, and now last year was 72, and now it's 73. But as long as you have to take a required minimum distribution from an account, you can actually give any amount of that account from the account to the charity. And instead of it being a deduction from your income tax, it's actually like you never took the money out. So if you had to take out 10,000 as a required minimum distribution, but you gave 2,000 of that to charity, the IRS treats it as if you've only taken $8,000 out. So that's become a really a big part of our toolkit over the last couple of years as well, is for people that want to give and they're of required minimum distribution age, can we use your IRA to make this gift more efficient? So those are some of the things for lifetime gifts. One of the things that has been really impactful for clients that are wanting to do estate gifts or gifts at death, especially if they are wanting to be split between multiple different individuals or organizations. If you give let's say that you have 2 children and you want to give X amount to a charity and you have multiple different accounts. One thing that we can consider that's extremely tax efficient is giving any after-tax or stock portfolios or real estate to the children, to our beneficiaries, to our heirs, and leaving IRA, individual retirement account dollars to charities. This really serves, and I've coordinated with estate planning attorneys to help people set up their documents in this way because it serves 2 purposes. One, the IRS allows for what's called a step up in basis, where if I have $1 million house and I bought it for 100,000, if I were to pass away and my children were to inherit that $1 million house, the new cost basis that they would have is $1 million, not 100,000. And as we know, organizations don't pay charitable organizations don't pay income tax on IRA distributions. And so now you've taken something where the children would have to pay tax on an IRA, and they have to take it out over a series of 10 years. Those rules don't apply. They actually get to inherit this $1 million without paying any capital gains tax. They have a new basis established, and the charitable organization does not give or does not pay tax on any IRA distributions. So it's really made for a win-win. You can also leave, life insurance proceeds if you add them as sort of a beneficiary on one of the policies. Those proceeds are paid immediately, and the gift can make an impact pretty quickly. So there are a lot of different rules and regulations that we have to follow. And again, this is some really deep work around, do I want to give? Where do I want to give? And then my job is to come in and help people discover how to give and how to give most efficiently. So there's the 5 things to remember. That's obviously high level, but some detail. And I'm here to answer. I've seen a few questions pop up in the chat, but I'm here to answer any follow-up questions to the financial planning aspect of giving as well.
Hello, everyone. We did get a few questions. If Chanel and Wes, you are ready to answer those. Perfect. Okay.
Good thing.
So the first one, we kind of covered it. Can you possibly go over the 5 main and important documents that you need to have done?
Sure. I'll take a quick pass at that, and then Wes, I'd love to hear more from you on how financial planning and estate planning can work better together. So in every basic estate plan, there are legal documents. There are, no matter if it is like a 5-page estate plan packet or a 100-page one, there are some of the core decisions and designations that everybody needs to make. On your will document, that is who gets all of your stuff, your assets, guardianship for children, pets, plants, whatever that might be. And you pick an executor for your will. That person is the one who, that is the person who is in charge of filing paperwork with the court, with being the project manager and accountant, essentially, of the will document. And that's often the kind of foundational one. There is a power of attorney document, and that is giving somebody your permission to speak for you, access your money, pay your bills, talk to medical people. If you're not necessarily at the end of life for medical decisions, like a living will, and I'll talk about that in a second. So the executor of your will is in charge of distributing your money to who you want to have it, if you have a will, or to your heirs, according to the laws in your state or your will, after you die. The executor of the will only gets power after you die. The power of attorney is the person who can pay your bills, help you with medical things, make decisions for you if you're not able, for a number of reasons. That power of attorney has that ability or power up until you die. As soon as your or somebody's death, then the executor in the will takes over. There is a living will, an advanced care directive. That's the kind of care that you do and you don't want to have. It can be anything from do everything possible. I want to have the most amount of days to I want to have the best days. And if that's fewer days, then I want that. I want all of the medical treatments and clinical trials. I don't want any after this certain point. You would name somebody to be your medical advocate. So in each document, you name the person. Sometimes it's the same person, a spouse or family member. Sometimes it's very different people in each one. And the medical advocate in your advanced care directive is the person who will talk to medical staff, family, and communicate your wishes for your care in advance. And it is an opportunity to be direct, advanced care directive. And there are a number of templates that are free to use. And so we can do a follow-up and add, Wes, your point about some of the online vaults or storage areas where and how to store this stuff is a really good one. So those are the basic documents. Trust is a kind of like a financial account or entity you set up to own your assets on your behalf, and you write down and specify all of the rules around who gets what when. There are trusts you can change, add, or update or cancel. There are also trusts that you cannot change once they are set up and funded. And so whatever level of planning and specificity is important to you, there are a number of different options. There are, talk to an estate planning attorney in your state who has some experience, especially if you have a specific concern like international guardianship or multiple properties in different states. And find somebody who works for you and talks to you in a way that you like as well, because it's like I was going to say like getting a good dentist, and I apologize to all the great estate planning attorneys out there, but you want somebody who you're going to match with, who's going to be an advocate for you. So those are the core decisions and designations. Wes, what else do you have to say about the, financial complementary merging of plans with the estate planning? Because sometimes people don't know that you've got a beneficiary designation here that conflicts with another one over there. Just as an example.
Yeah, I think it's in almost every relationship that we have, we're coordinating what we're doing on our end with what their estate planning attorney is doing. And so that is there are some fundamental things to consider. Is that beneficiaries can supersede a will. And oftentimes, if we're working with the estate planning attorney in coordination, we will actually have them send us back how they want the beneficiary designations to look. We will submit that to the custodian and make sure everything is on the up and up. That slide that you had about 420 hours is very real. And whatever we can do to mitigate any time, energy, or resources during the process, during a typically painful process, we want to take advantage of. So, there's just fundamental things like that, and also making sure that we have a copy of it and we're a resource to beneficiaries, heirs, executors, personal representatives, and all of that after when it's time to distribute assets. Transparently, I'm doing that twice as we speak. So it happens, it's unexpected, and people have a lot on their mind during that time. The other area, and without leveling of importance, is asking the hard questions to help people. This whole thing, money, back to money being a tool, is about the human element of finances and helping them be intentional with their wishes. And so because we happen to know or have access to, what their goals and what the resources they have, one of my favorite questions to ask to center the conversation is, what's the problem that we're trying to solve? Right. So if you do this, if you leave this, if you don't leave, what are you trying to, if you give your kids money throughout, what are you trying to solve for? And is our solution actually solving the problem? And when you ask those questions and they have to be reflective and introspective on the answer, then I can actually share that information with their permission, with their estate planning attorney, so that they can actually draft the documents that are necessary to actually achieve their wishes. And I have found the most incredible answers by asking that question. I have heard things like, I don't want to be a miser. So this is a client that was trying to figure out if they can give to their kids, and they found out that they were going to inherit a bunch of money, and they were like, why did he give it to you? Why didn't he help us when we needed it? And so through that process, I actually told her, well, if you don't, you're going to end up in the same position as just your dad if you don't do something about this today. And so then now, because there is going to be some inheritance and a lot of wealth is passed down, they can take that information and set up the documents accordingly. And meanwhile, during their lifetime, I can help them alleviate the the giving at death problem, which I'm really passionate around. So and how all of the things coordinate, the tax implications of real estate versus the tax implications of a Roth versus an IRA, and what stuff that we have to take out versus we don't have to take out, and at least being able to guide the conversation of, here's what they want, and you take this and draft the documents as you see fit.
Mm-hmm. One thing that I love, that what's the problem we're trying to solve, and it can be well, there are many answers to that that all of us have individually, and one of them can be, I want to proactively do this one thing, or I have a real fear about this other thing. And it could be, I don't have a will and I don't have somebody designated, and in my state the order of heirs is, my sister, who I share no values with at all, is the default person. So I just want to make sure that she's not in the room. I don't have a sister, by the way. Also, when it comes to whatever level of wealth you have, $5 or $500 million, protecting the assets that you have, there has been historically one of the saddest things is as people lose and a lot of financial stability, or any financial stability they might have, or lose a home because probate takes a year or two, and then you can't make the mortgage, and then the bank wants to foreclose because you haven't paid in all of these months or something. So sometimes setting up not complicated, but some proactive tools or tips or defenses or some documents or contracts to transfer a deed on death, or, Wes would say in this situation, that's a great thing to do. And another one, do it this way, because otherwise you're losing a lot of the assets. And for many families out there, your home is one of the biggest ones that we have, and we don't want to lose that. And we especially don't want to lose it at the worst time in our lives, when we're also dealing with grief and loss.
Thank you both for that. We only have time for one more question. The other questions in the chat, I have saved them, and we will connect you directly with either Chanel or Wes. My last short question: is it better to keep money in the bank, CDs, and money market accounts, or in property, such as land?
So you guys think that that's a short question? Is that what I got?
The length was short.
Yeah. The answer is it depends, and I tend to believe that people, we want to be reasonable. We're not spreadsheets, we're humans, and so I guess the construct of that is I need to have some safety. I need to have an amount of an emergency fund. I need to have things that are not on the roller coaster, and enough to sleep at night, and enough to meet my immediate needs. And to the extent that I have that, long term, not short term, typically the money will be better off long term elsewhere and is more efficient. But the answer is you need both, and the breakdown is it depends on how do I have enough to meet the needs and how many years, and should I have something more long term for the rest of it. So you need both.
Awesome. Thank you guys so much. I really appreciate you, and I know we all do. I'm going to have Anne take it over just to wrap us up.
Well, thank you so much, Wes and Chanel, Zoe, for keeping us on time, for all of you who participated. I will just close with a couple of pieces of information for you. Zoe's going to put in the chat a way to sign up for our newsletter if you'd like to stay connected with us, which we would love. And then we have a couple of events coming up for those of you in the Seattle area. You can tour Camp Erin, which is a grief camp for kids, on May 31st in the Puget Sound area. You could meet up with us for a beer and barbecue on June 4th. And then every year we have a luncheon where we get several hundred people together in a room, and for an hour we raise awareness and money for the services that Safe Crossings Foundation funds. And then finally, I just want to show our contact information to all of you. If you or someone you know needs services, please reach out to us and we'll get you connected with someone who can help you. Thanks again to Chanel and Wes, and enjoy the rest of your day.
Thank you, everyone.